A lot of great topics to cover today. First, the Cybertruck is continuing to get great exposure and reception. ESPN posted to their 66 million Instagram followers asking which celebrity Cybertrucks is the best. Second, Goldman Sachs raised their price target for Tesla from $175 to $248. We'll explain why they did that and also what another firm, Oppenheimer, believes is the most important reason for the stock to rise. Third, China has just added Shanghai to their list of cities that allow using driverless robotaxis. We'll also give an update on how Tesla's doing in China. Fourth, Tesla is now offering 0% interest rates in the UK for Model 3s and Model Ys. Yes, 0%. And finally, as a bonus, Tesla is partnering with GM for superchargers in Mexico. So I've got Brian White. He's got his YouTube channel, FutureAza. Thank you so much, Brian, for joining me.
This is so exciting. These are all great topics, and I know we would have rather done them each as individual topics because we could talk about any of them for days. So I'll do my best to keep it to the short and to the point.
What I like to do is combine certain stories that are perfect for the guest. In this case, these are right up your alley. You know a lot about the models, the companies, the vehicles, the pricing, the China, of course. That's your bread and butter. So let's start with the Cybertruck. You've got ESPN posting to their 66 million Instagram followers who got the best Cybertruck. I'll play a little bit of that now. So it's just basically a flip.
Yeah. While that's playing, what I would say is imagine if instead this Instagram was which celebrity has the best taste in Coca-Cola products, and it shows one with a Coke Zero and one with a regular Coke. You cannot buy this kind of publicity. You could. It would cost a fortune. It would cost $1 kajillion. And here we're getting huge.
Which is your favorite, Brian?
I don't know. I like the gloss. The piano black is pretty good.
No.
No?
I agree with you. The piano black is probably the best. Yeah, that's my choice. But yeah, you can't buy this kind of advertisement. But it's right. People said, I hate the car, the vehicle shape. I can't do it. But you can see now that it's good. The pendulum is switched to people loving this thing and wanting this thing. So.
It is such a halo. And I love that professional athletes are so large physically that they make it look like a car next to them.
Yeah. Okay. So that's Cybertruck's doing well. Obviously, the ramp. What is your expectation for the percentage or the number of Cybertrucks by the end of this year?
So I've been saying 89,000 for the whole year for quite some time. I do think it needs a downward revision unless we see some big jump in the first month or two of this quarter. I'm still thinking north of 70,000 for the full year, which would mean it's gotta get to big numbers and quickly. But the ramp appears to be going well. We've got LG who's got their 4680s coming out. We believe next month they'll be online. That would allow them to grow at a pace that could exceed the capacity of battery production within the company. Cato Road is surely still making some cells that can go into vehicles. Austin is ramping their production as well. And of course, that means there's surely going to be a Gen 3 of the 4680. I hand-delivered a Gen 2 4680 that Sandy Monroe gave to Jordan Giesecke to give to UC San Diego for analysis. We'll find out more about that. But I am of the very strong suspicion, and I'll be interviewing Sandy later today, I'm of the very strong suspicion that there's a capacity in there that we are not yet realizing.
Yeah, it's looking like it's caught up. Okay, so let's talk about the stock and the changing sentiment here. You've got Goldman Sachs raising their price target from $175 to $248. And the reason is reflecting higher deliveries, increase its multiple to reflect increased market multiples, and investors being likely to be more forward-looking on FSD potential. Again, you're now starting to see these institutionals adding FSD potential in there. While the firm continues to believe that Tesla is well positioned for long-term growth, given its strong position in EV and clean energy markets, it expects weaker market conditions to weigh on earnings in the near to intermediate term, but views the valuation as full. Okay. Then you've got this article talking about why Oppenheimer thinks that the stock could still run. So this is just the update on what's happened in the last, obviously it's now reversed the losses, 9 to 10 straight days. And now we're back to where it was in January 20 at the beginning of this year. But according to Oppenheimer, investors are now shifting their attention and focus to AI and full self-driving as Robotaxi unveiling day on August 8th coming closer. And they say, we believe the value of its FSD AI platform is the key to whether shares will continue moving higher or begin to moderate again. While also recognizing the bears of Tesla stock remain focused on margins and valuation, which they believe is overblown and inflated. So the sentiment has changed. More and more institutions are talking about Robotaxi and FSD and AI. So comments on that?
Yes, so UBS raising their price target. Good job. You caught up with what the stock is actually at. These guys, again, Alexandra Mertz explained it to me a year ago, saying these guys are driving by looking in the rearview mirror. You're going to miss every bend in the road when you do that. So maybe what it looks like to me is that they're starting with a conclusion and working backwards to find the answer, the right question to ask to get to that answer. And if the answer is the stock price keeps going up, the correct way to get there is maybe it's because of all these other things. It was laughable for years to the bears when we would say it's not just a car company. And it appears that now maybe the analysts are starting to realize these new line items, these new divisions, AI is big. It is not just big in the industry, but Tesla is actually a mover and shaker in that industry. So they've got this idea that was so laughable so recently is now becoming pretty crystal clear. And yes, the bears are focused on, well, the margins, the competition, all that. Look, guys, you've been saying the same thing since the beginning. At some point, we're going to stop listening to you. You and I did long ago. If it wasn't for the fact that we are professionally required to cover this stuff, I would not listen to these clowns because they are bad at their jobs and come up with wrong assumptions.
Earlier, you said UBS. It's actually Goldman Sachs that said that. And then, but yeah, no biggie, because it's a lot of them are doing this. And then we have Morgan Stanley talking about energy. So not only do we have FSD coming up, and you got AI, and the discussions of those things are starting to, percolate more. But energy, right? Tesla shocked everybody with a tremendous energy thing report. And so Morgan Stanley actually put out a note saying that energy is going to be larger than autonomy, auto business. And they showed this, right? Which is incredible. The energy, right? These mega packs, they sell for $1.4 million, and the operating margin is around 20%. And that's actually the low percentage, right? It's going to be even higher than that over time. Once you calculate for the software and the other margin that comes as the contract is implemented, it's a lot higher than a car that sells for $40,000 and has about a 7% operating margin. One mega pack is equivalent to 35 cars. Or the income from 100 cars, just one mega pack. And it's so much easier for them to build these mega packs, right? It's like, it's they can pump these things out so quickly. One mega pack, one mega factory, which is 10,000 mega packs, is the revenue from 350,000 cars, or the operating income from 1 million cars. Just one mega factory. Now we've got 2 mega factories.
So I had a chance to go to the mega pack factory in Lathrop. I was there with Joe from the Tesla owners of San Joaquin Valley, and he helped me understand what's going on there because he lives there and he visits it all the time and he knows a bunch of employees inside. And what's breathtaking is you look at each of these $1.4 million units just sitting there waiting to ship out, and there's dozens and dozens of them. And then break time rolls around and everybody comes out to take their break, and you realize there's not very many employees here. It doesn't take a lot of people or space to produce hundreds of thousands of dollars of revenue on each one of these units. And it's the sort of business that why isn't everyone doing this? And I guess the answer is they don't have the competence to do it in a way that would work the way it does for Tesla.
And then when every data center needs to have these mega packs to power it, Who's going to have the software, the auto bidder software to know how to, manage it? It's just going to be Tesla. Okay. Lots of other stories to cover here. Big movement in China. Let's see how Tesla's doing in China. But first, Robotaxi in China. China continues to open up their regulations to allow robotaxis, or whether driverless cars. And this news here is that they've done this now in Shanghai. And it's not new for us because we've been following this, but they just officially did it. The testing area covers about 127 miles of roads in Shanghai's Pudong district. They're allowing these driverless robotaxis. So they added Shanghai to the list of top tier cities. So now you can see that residents can now book free rides in robotaxis of 4 companies: Baidu, SAIC, self-driving startups Pony AI, and AutoX. The taxis are driverless, don't have supervisors physically present in the car, with the companies approved to offer services through January 4th. And for those, yep, go ahead.
So a quick background on what this means and what's going on with Shanghai. So Shanghai, if you pull up a picture of the Shanghai city skyline and you see all the skyscrapers, it's on one side of the river that runs through town. That is where the Pudong district begins. The Pudong district used to just be nothing but farmland, miles and miles of farmland. And it's where they decided 25 years ago, this is the new development center. This is where we're going to put everything because we got the land. It's right there. The Pudong district is vast, and it's also where the Giga Shanghai is located. It's where all the new factories and skyscrapers are. 127 miles of road is a fair amount, but Shanghai is vast. It is a huge place. The reason Shanghai gets to make its own rules is because it is something like 2,500 square miles of land. That's bigger than some states. Delaware's only like 1,900 square miles. And we've seen what kind of judges they have. No, that's a different matter. But they are huge. They get to function more like a state than a city. And this is, while it may not sound, well, it's just one district. Yeah, but it's the district where everything happens. And it's a good sort of test because it's the easiest part to drive in. All the roads are new and wide and straight.
Mm-hmm. Makes sense. So it says here that first tests of robotaxis started in cities of Wuhan and Chongqing in August 2022. It may still take longer to see large-scale commercialization of robotaxi in China, but approval from these major cities is an important step in granting these companies access to test their technology and access road data. So, top players in the U.S. is Tesla is planning to launch robotaxi services in August. I don't know where they got that from.
Well, they're going to announce it on 8/8.
Oh, yeah, gotcha. Yes, that's what it is. Thanks. I was like, oh. Well, Alphabet back Waymo recently expanded services in San Francisco. So they've been testing massive trials on the West Coast. China can't be inactive and wait when U.S. companies have already made their move. That's why we're seeing more cities opening up their roads.
Yeah. And that makes sense. And to say that Waymo expanded in San Francisco is a bit of an understatement. They expanded well beyond the city limits to more like a tri-county area. So if you're actually able to get those vehicles to do those rides along those routes, it is a substantial amount of area covered and goes, I'd say, a long way to validating Waymo's approach. If they're actually able to expand scale like that, they could still have a future.
Okay, let's continue talking about China. How is Tesla doing in China? Well, the Model Y dominates first half of electric vehicle sales. The reign as the best-selling electric vehicle in the world does not seem to be ending anytime soon, especially based on its recently revealed performance in China. New data from China showed that Model Y dominated. They outpaced the vehicles of BYD and Nissan, rounded up the top 3. The BYD Seagull, Nissan Selfie were still significantly behind Tesla, which showed that the Model Y had 207,000 units sold. Seagull had 167. And this Nissan 161 units in the first half of the year for 6 months. And this is the table here that we're just showing you. These are what the cars look like. I mean, if you look at the Seagull, does not look as good as the Model Y, but
the
maybe the
Seagull is
photo
that
doesn't get.
$11,000 car. It's a very small car. If you want to
Right.
see one up close and personal, Caresoft was able to import one
Yes.
to do a teardown, and it is a cute little car. What's shocking to me is
Yeah.
the Model Y is probably the most expensive car on this list. Now, it's way cheaper in China than it is here or pretty much anywhere else, because it's not just made there, but it then skips all the taxes that you may have to pay on it in other markets. So it is a huge testament. And it's easy to say, well, yeah, but if you take all sales of all models, BYD's outselling them. Yeah, that's true. And that's great. And I love to see it. But if you can make that kind of market dominance with one model, and really there are just 2 Tesla models in China. They do sell a lot of Model 3, but they do not sell a lot of S and X and no Cybertrucks. It is still impressive. And if the market cools, as it sometimes does for some models, they just ship them to other countries and sell them there. We're seeing very strong sales in Korea, where it was the #1 imported vehicle for, I think, the first half. So it's, there's still plenty of domination left to go around, and that's before we even get into the refresh Model Y, which we now believe is coming in Q1.
So yeah, that's good that you pointed it out. That's based on per model, right? So just, and then totally different segmentation, but it just shows Model Y is still selling well despite the segmentation and so forth. Okay, so let's see how Tesla's doing in China. Roland Percher follows this closely. He's at Pololi on X. Tesla's market share in China is stable. So if you look at the per month, the market share per month, you can see that it's it dipped in April, but it's kind of like a flat growth. Everything's fine. So there was supposed to be this, flat, complete, downturn in the economy, and you can see that here. Now it's looking like at least it's stabilized. And that's China.
And Roland does great work. He is a good follow. He does great charts. He's a very sharp guy. I had a chance to meet him in Austria, and I said, "I know you," and he said, "Yeah, I know," right? But yes, but I don't recognize you in person because I just get a little tiny picture. His analysis is very grounded, data driven, fact based, and cuts through a lot of the nonsense. There's the people saying that it's the end of the road, that these models are stale. When you dig a little deeper, they'll say things like, well, Tesla's never done a refresh of any of their models. And you say, what on earth are you talking about? All but one has been refreshed or is itself brand new. So yeah, I think the market is waking up to a lot of these realities that you and I have been saying for years. This is a company that is still in a reasonably strong position, to put it mildly.
That's China. Here's what's happening in UK. So Tesla is offering 0% interest in the UK. So if you want to buy a Model 3, Model Y, it is 0% at this point. So obviously
with FSD transfer.
Yes. For those who already have a car.
For those who already have it. Right. I mean, if you don't have it, you don't need to buy it. But if you have it, I mean, if you're waiting for a sign from the heavens.
Good one. Yeah. But I think what I've been expecting and hoping to hear more is more and more of these finance interest rate kind of deals. And I'm expecting Tesla to do more of these. And a 0% interest rate, that is as good as you can get at this point. So, obviously these are little spiffs, not a big deal yet, but I'm just expecting that you might hear more. That's what I'm hoping.
Yeah.
So this is a pretty straightforward story. I think this is GM partnering with Tesla, but it's really just for the superchargers in Mexico. So GM Mexico is partnering with Tesla to build 1,000 charging points in Mexico. They've got their EVs there. So as part of the General Motors Mexico annual distributor convention, the president and CEO, Francisco Garza, gave a speech. He said the goal is to achieve leadership in electric vehicle sales. The company expects charging infrastructure to be one of the main components of this. So building a charging network with Tesla also means Tesla will be able to increase sales of its cars in the country. GM already.
Yeah, this is an everybody wins scenario. I imagine GM would want them GM branded somehow. Maybe it's the Chevy charging network, but everyone who's actually driving will see the little Tesla inside logo and have confidence that this is an actual charger that will work. And if GM wants to be in that market, maybe this makes sense. 1,000 seems really expensive, unless they mean charging handles, in which case, or the number seems really high. Divide it by 8 gets you the more realistic number. And I don't see why they couldn't just build these at Giga Buffalo and rebrand them as needed. But it'll be a heck of a deal.
So right now GM sells its Lyric model from Cadillac in the country, in Mexico. Coming soon will be the Equinox and the Blazer, both 100% electric, and Optic model later in the year. Tesla has already achieved impressive success in the country. In 2023, its Model Y was the best-selling electric car in Mexico. Model 3 was in 5th place. The expansion of the charging network in Mexico encourages consumers to opt for Tesla electric vehicles. So both is a win-win, as you said. General Motors announced it would work with Tesla in North America, right? Last year. And then they will include the NACS adapter, which is Tesla's adapter, to make their vehicles compatible with Tesla's charging network. And then they plan that 2025, their cars will come with the Tesla charging connector built in. So that's next year if everything goes well. We're working with our network of distributors to bring these devices to points of sale throughout the country. So whenever you see, right?
I think there's a bit of overhang right now with vehicles being sold, with people trying to sell their electric vehicles, but not having NACS. I don't think I would wish to buy one of those, knowing that in just a year, I apologize. I'm basically in outside here. That they're going to be, in 1 year's time, you're going to have a standardized connector. I just don't think I would want to buy a non-NACS vehicle right now. Once that overhang is gone, adoption can expand a bit. We can see the numbers tick back up. And of course, as word gets out that a hybrid is still just a gas car, maybe people will reconsider on that front.
So I have another point about why I think this is such an important story we just talked about. And that is, just a few months ago, there was a big hoo-ha that Elon was firing the entire supercharger network team, right? But of course he came back and said, well, actually we're still spending $500 million on it. We rehired a few people. We're still going to focus on existing superchargers. But the point that I was making back then was, why is Tesla the only company going to build this? It's not going to be the case. You will have companies like GM. You will have gas station companies. We've reported on this, massive oil and gas companies that are building super charging networks across the US, across North America, their own gas stations they're retrofitting to be able to be charging. There's no need for Tesla to be the only one to build this at this point. They've given you the platform. I've got the base here. Other partners, Starbucks is going to step up and say, we're going to build this and we're going to pay for this. And then we'll take a cut of the charging stations or charging that happens. You know what I mean? Like these kind of partnerships will happen more and more. So this is a good news, right?
Yes.
GM needs to pay for this. So
absolutely. Everybody needs to step up and pay a little bit, and it makes sense. The gas companies are doing it. They're charging too much for the juice because they survive off selling energy. That's their whole thing. But other people don't. Other people survive off getting you in the door, and for them it's marketing. If they can sell juice at cost just to get you to come in for 10, 20 minutes, even putting up, there's a mall in Vancouver, Washington that has free destination chargers where you can plug in, go inside, do all your shopping, come back, you got a 20% of a battery charge. That's great. And it costs them pennies. It costs them less than the ad that it would have taken to get you in the door. So the all of the above approach is what's going to work, I think.
Great. Thank you, Brian. That was great commentary. Follow him on his YouTube channel, FutureAza. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.